Okay, welcome everyone for coming to another weekly analysis. I'm Tyler, part of the TeamLetsEat group. We got a couple pairs as usual. We are in the last week of July, and it should be a pretty volatile week just based off of all of the news that's coming. We got a lot of high impact news. We have the Fed interest rates coming out again, which are probably going to be bumped up again, which is going to create a lot of movement. The yen pairs are setting up really good for a swing long, finally, like the final entry. And yeah, we'll just go from there. We're just going to touch on crypto kind of briefly this time because we've been looking at it a lot all weekend, and we have a play that's in action already. And so let's just.
Tyler, hold on. Emmanuel, can you mute yourself, please?
The what? Oh,
I was telling
Emmanuel.
Emmanuel to mute himself. There we go. Continue, Tyler.
All right, perfect. Um, all right, so we're going to start with Bitcoin 30-minute chart. By the way, for anyone watching this, you can see now I changed my whole layout because I just wanted something different, something new, something to mix it up a little bit, add some spice, and yeah, I kind of liked it. I saw someone else with a similar chart as mine, what mine currently is, and I don't know, it's kind of satisfying to look at for me. So for now, this is gonna be what my chart's gonna look like. So right off the bat, what's going on here is a smaller time frame setup. So we had a pull down into 22,000, and that rejected pretty well. And I believe we are now going to trend our way back up to between these levels, which we'll get into. I'll show you why on the daily time frame. As you can see here, if I paint this picture, it's a very basic pattern that Bitcoin has. I mean, Bitcoin is honestly one of the easiest pairs to trade, in my opinion, just because of when it's really flowing and trending. I mean, it's so like basic almost. It's very easy to read. And what I see is these bottoms 1, 2, 3, followed by the last one, and we got a nice push out. We pulled back about halfway to this area that I had marked up, and I'm just simply looking to see this go long into 23,500. Really, that's my target. It's 23.5, and from there I'm going to be very interested in a sell. As you guys know, even from last week, I've been looking for a Bitcoin to short for so long, down to like 15 or 14,000 or maybe even lower. And there's a couple plays we had in between. We did short right here. I closed pretty much all of that out. Like, yeah, pretty all of it is closed out from here. We had a couple intraday trades along the way. And with the rates coming out, bumping up the rates, last time that caused dollar index to go up, which ultimately brings pairs against the dollar index down. And I think they might be timing this Bitcoin short with that news release to help propel it downwards. And if we go to the daily time frame and reset the chart, by the way, before we go into the current daytime, or yeah, you guys know what I mean, right here, see these two candles, this bullish candle, then this bearish candle. This bullish candle is the last rate release, May 4. Obviously, looking at that, what happened after that rate release? Price tanked. Like, how many pips? 1,400 pips it went down after that rate came out. And they're going to do it again. And that's kind of what I'm expecting. Again, like I'm thinking that they timed this. Like I know we were shorting it earlier down here. I think they were timing it for this release to help propel it down, and to give everyone like a bull trap, trapping everyone who thinks it's gonna go up, get a bunch of people buying in there, and then they're just gonna tank it. Now, before that happens, as you can see, what I just showed you, that the day it came out was bullish, right? And it pulled into this previous daily high, right up in here, right? Perfectly right on that daily high. Now, if I clear out all that stuff from there, these levels right here, this daily high at 23.3 thousand, that's only 60 pips away. So I have a feeling it's possible we actually hit the highs up in here, which is about 100 pips away. Just out of curiosity, I want to see how big. So that was a 200 pip candle. Okay. Now I don't think we're gonna do specifically match that and do a 200 pip candle up and then drop, but the overall flow of what the market is doing, which means pulling up into the previous daily highs where the sells came in at, and then turning around and dumping from that area. That's what I mean by I want to see the same flow happen in this at this time, or coming up this week. So as you can see here, we spike down here, spike down here. This is where we're longing from, pretty much this area. I think, you know, the rates come out Wednesday, I believe. I'm pretty sure it's Wednesday. I feel like I should probably know that for sure, but I'm pretty sure it's Wednesday. So we have a couple days before that happens yet, and I think what we're gonna do is slowly go up. Right, we're gonna slowly go sideways upwards, and then come Wednesday, it's probably gonna be extremely volatile, and we're probably gonna pop up to these highs. Who knows? Maybe we'll hit 24,000 again. Whatever it wants to do, let's let it do it. And after that, probably after that next day, after Wednesday closes, we'll be shorting Wednesday night. Because if you take a look here, this day closed out bullish, and these candles close out at 8 p.m. Eastern time. So pretty much that first, when the first 8 hours after they came out, because I think it comes up, they start the meeting at like 12 or something. Those 8 hours, it was bullish, and then that next day, I mean, that wick didn't even break that high right there. It just very slight wick to the upside, and then it dumped 400 pips in one day, and then it dumped 1,000 pips the following days. So that's something that I'm gonna be aware of. I think again we're in a smaller range here, right? So like we're already from this bottom to the top, that's 180 pips to this level right here, not the top. So I think we're already slowly moving that direction. I don't think it's going to be as crazy as last time where it did 200 pips in essentially that day. But I do think we're going to pull up into these highs, and from there we're going to look to short. So if we take a look at the 4 hour, what I really like to see is, you know what, actually I'm going to come back up here. Okay. Hold on, let me mark this up. You see how we have the peak highs here, right? This is the ultimate highs. Price did not come back to this point. Then it broke down, and we now know, okay, price is selling. This range of accumulation right here, we can see price pulled into 1, 2, 3 times. This range right here is the important part, okay? This range. If we bring it back to where price is right now, obviously it looks different, but this is the range right here, which is why I'm buying, because I think we're going to pull back into this. Now, it's possible we spike out this high right here. Again, like I said, maybe we do hit 24,000 again, maybe not. But whatever it's going to do, I believe it's at least going to pull up to like 23.6 thousand, which is around 100 pips from where it is today, right now. Which, that would be great. I mean, yeah, 90 pips from where it is right now. So maybe we will get some super sporadic movement when that news comes. Maybe it goes spikes above this high. You know, we'll react and adapt to however that happens. But overall, what I'm just looking for is where do I want? What tool do I want? Is I just want spikes in here, followed by a dump after the news release. The night of Wednesday, pretty much, is when I'm looking to see this thing actually start turning over. And that translates into Ethereum as well. Ethereum actually made it all the way back up to the retest of this almost, which is my long target. Because obviously, if we're expecting Bitcoin to push up another 100 pips, Ethereum is probably going to push up another 100 pips. And that's exactly what this target is. It's 120 pips, which is the retest of this level. And to me, it would just make sense if it retests that level. But it's just interesting to see how Ethereum's all the way back up here, and Bitcoin's, I mean, the retest on Bitcoin with the equivalent level would be 28,000, which I highly doubt that's going to happen right now. But yeah, that's the look on Ethereum. It also kind of makes sense. So let's say Bitcoin's about to drop. Let's say the market is about to drop 1,000 pips. It makes sense if Ethereum pulls up to 1,700 because the short target that I've had is around $600 or $700, and 1,000 pips short, it would need to start at 1,700 in order to drop 1,000 pips and hit the target of $700. So that kind of makes sense. And the Bitcoin target is somewhere between 14 and 12,000, and that is around 1,000 pips from where it is right now. So that everything lines up perfectly fine, perfect. So yeah, I don't think Bitcoin is going to be going much higher than 24,000, if at all, hitting 24,000. Like I said, I think we are going to stay kind of not as huge of movements, just this entire range. Like I was just saying, the entire range is smaller. We're not playing between 400 or 500 pips. We're playing between two. I mean, what is this? This is barely over 200 pips. So yeah, I think the reaction is going to be a little bit less this time. And yeah, I don't want to keep babbling on the same thing. So pretty much just looking to take this long to 23.6. If you have not gotten in already, it's pretty much still right at the entry. It wouldn't surprise me if it touches the zone one more time. And the target again is just right in the middle of this, which is 23.6. And yeah, Ethereum is still marked up. So that's crypto. And along the lines, we're going to go right into gold, because very similar to what I was talking about with the rates, I think we're going to get something similar happening here. So we're going to start at the daily time frame, and we're going to look back. You see this candle right here, this bullish candle. This is the same day. The rates came out right here, May 4. Look what happened. Explosion up, followed by a 1,200 pip drop over the next 8 days. That's huge. That's absolutely monster trade. Now, if this is Wednesday, this is Tuesday, this is Monday. So let's take a look right here. So Friday, the market closed with a huge wick, and it kind of looked like the bottom of the market, right? We got some wicks. We had a bullish candle. This one was huge bullish, but it closed down here, right? So Monday, price dropped 400 pips. And then Tuesday, Wednesday, Thursday, it went up 600 pips. Then the rest of that week and the rest of the next week, it dropped 1,200 pips. Very volatile, very crazy movement. Now, if you take a look at that price action, and we come on down to the current price action, it's pretty dang similar. We have a push up. It looks like the bottom. We closed out Friday with a big wick, and I'm expecting Monday, today's candle, to be pretty bearish. I think the market is going to push down quite a bit. My target is 1,700 essentially, and from there, I'm looking to kind of repeat what just happened, what we just looked at up there. I want to see it short down here, and then I'm going to be looking for a buy back up to this area for when the news comes out. And then once we hit these highs again, and possibly these highs, so 1740. So it's, let me paint this out. So we come down here, and then we come back up here, and then I'm looking to short here, and I want to take this short. Oh man, I messed that up. I want to take this short down to 1625, something like that. In 1625, I think that is going to be the actual bottom of this thing, and from there, I think it's going to be more of an accumulation between 1625 and 1700 until the second quarter with negative GDP is released and it's official. At that point, that is the official sign of a recession. And once that official sign of a recession comes out, I think it's going to be all over the news, and that's when the true bull run of gold is going to start. So before that, I think we're going to get this sell right here, which is a pretty gnarly sell. That's 12. That's literally the same thing as what we were just looking at. It's 1,200 pips from 1740 to 1620. So I think we're going to get something like that. When I look at the 4-hour and I look at this chart, it makes sense. I mean, to me, looking at this, it doesn't look like it's going to go bullish right now. I mean, this just looks like it wants to come down to this area. So with that in mind, let me just show you why 1625. It's actually on the daily time frame. I don't know why I just went all the way over here on the 4-hour. I'm just going to go to the daily because it is a daily level. We have a what you could call a retest of this level right here, but specifically the imbalance between the bottom of this wick and the top of this wick right here. So this imbalance right here is why I say 1625. The next imbalance is at 1516. That would be nuts. I don't think it's going to go to 1516. That's a lot. That's 2,300 pips. I just don't think it's going to make its way down there. Maybe something happens and everything changes, because that really is the liquidity point. As you can see, it dropped and it filled orders right here, and it never came back since. So I'm not ruling it out as impossible, but 1625 is definitely the current target. Maybe when we hit 1625, maybe it just kind of trends down a little bit. Like I said, instead of maybe accumulating between 1620 and 1700, like I said, maybe it trends down just slowly for like another month to 1515. I don't know. We'll see what happens, when the time comes. But for now, definitely 1625 is going to be the target, because that's 1,200 pips. And that's the first imbalance. That's the first gap. You see this gap right here, how there's no wicks? That's why. See how like right here, there's wicks filling? There's even wicks down here. Right, there's no wicks right here. There's a big gap. There's a huge gap right here, I'm aware of that, but like this is the first one, so that's what we're going for. at first. So the first trade that presents is a short, and I'm keeping it extremely simple. Obviously, we got a line off the top of this wick. This is kind of like the head and shoulders sort of a pattern, you know, if you like those patterns. So I think if we are going to short, we're not going to break the high of that wick, and we're going to do something similar to what it did. I think it was right here. Yeah, it was right here. So obviously the structure is different, but this right here, this pin bar, is the opening candle of that day, right? Remember when I showed you how it price dumped? Here's the Monday, and then this right here, this push up was the rate release, and then obviously followed by that 1200 pip down move. Just to show you guys where we're at on the chart again. Now we're on the 30-minute time frame. The wick on this daily candle is 30 pips before it dropped 400 pips, and it wasn't even like a retest of anything. It literally was just like a tiny wick just because it needs to make a wick, followed by a 400 pip move to the downside. So this right here, I mean, that's kind of what I'm expecting right here. We're at 1727 now. This level right here is 1730. That's 30 pips. So I'm just looking to see this level get spiked out barely, probably by like 5 pips. And from there, I'm looking to take that short down to, specifically, it was the bottom of these candles right here. I'll just drag that to the left, and it lines up with that. So that's why it's dragged out all the way over there. It could go lower. That move that we were just looking at, it, like I showed you, it went 400 pips. This is 340, right? Maybe we push all the way down to like these levels down here. Then we'll take the buy down here. But I'm getting out of the trade right in this zone right here. 300 pips is plenty. I'm okay with that. Don't have to be greedy. So after we take that short, obviously we're going to be looking for a setup on the following day to buy, and then we'll probably hold that buy until after the news comes out. We're probably going to be holding it through the news, depending on how it all plays out. You know, if we can buy at like 1693, okay, 1693 buy in, and let's say by the time the news comes it's at 1720, then yeah, we'll just hold it with no risk. The target is going to be up here for very obvious reasons. I think if it's going to drop 1200 pips, it's probably going to pull back up to this area with all this liquidity. That just makes sense to me. It probably makes sense to you as well. So the buy target will be 1743. You know, I've seen 1740. I've seen 43. The two numbers 43 on gold so many times. It loves 43 numbers. 43, 43. Yeah. I mean, even right here. Obviously, this isn't as clean. I'm just going to put a line. See how it respected 43 pretty well? That's just one little example. But yeah, obvious reasons. So that's why I was saying kind of before we started this, I think gold is going to be pretty nuts this week, because I think we're going to get like 300 pips down, 400 pips up, and then we're going to end the week with an entry on a short that is going to leak into next week, probably hold until the end of next week. If it's really going to go down 1200 pips, it's probably going to take like the end of this week and the entirety of next week. But I mean, that's 300, that's 780, 770, that's dang near 2,000 pips on gold in 2 weeks. So that's a pretty good amount of pips on one pair. And then you add in Bitcoin 1,000 pips, Ethereum 1,000 pips, and we haven't even started on the pound pairs yet. So off of that, let's start on the pound pairs, which are actually moving right now. We'll do the pound Aussie because that's kind of a solo guy, and then we're gonna look at pound yen. And pound yen obviously translates to the euro yen, so we're not going to go super deep into the euro yen because it's the same thing, essentially. So pound yen we've been shorting since right up here. I actually still have a sell position up here at 1755. We took another short at 1742. I actually shorted again at 174 when it kept not breaking this. I closed a lot of that out actually as it started pushing back up here because I knew we were at the end of the week. The weak candle is going to have a wick on the bottom, so if it's not going to close down there, it's going to push back up a little bit. Why not just close some of those positions? So I think I closed all of my positions besides this one. I think I still have this one on. I don't look at my MetaTrader that much. I just enter the trades. So with that being said, I think we're going to continue down. It's possible that we see some resistance here and we consolidate a little bit, right? So because of the news happening this week and just the way pairs correlate with each other, like the Aussie dollar, the pound dollar, then you mix those to make the pound Aussie, and then the dollar index from all, you know, the rates and all that, right? It might get a little hectic, but besides all of that, I think what we're going to get is a short opportunity fairly soon. Honestly, I just want to see something like this. Okay, let me bring you back in time. Let me bring you back in time. Right before I even say on your own, where do you think I'm about to point to? Just make a guess in your head. Where, what candle, just candle by candle. Okay, bam, this pin bar right here. See how we push down? We push down and we push down and then we close back up here. Let's look at the next candles, right? Let's look at this little box of candles. Okay. Oh, that actually looks cool. Hold on. We're going with that. Okay. Pin bar. This is where we're at today. What does the next day do? It makes a 10 pip wick followed by a push down to the low of the pin bar. The next day breaks that low, pulls all the way up, comes back all the way back down. The next 3 days make its way back up. After that, we see the trend down again. So from A to B, that's 6 trading days. Price opened and closed that 6 days at the same time, or at the same price, sorry. Within that 6 days, there were some trades though, right? We got a short down to the bottom of this pin bar, and then ultimately we had a buy from here up to the top of these wicks, right? Forget all this random noise. We had a buy from here to here. This is A, this is B, or this is B, whatever you want to call it. Consolidation, accumulation, right? Whatever you want to call it. Price just set up for the next run down. It had a bit of a choppy week because look what happened the prior week. Price dumped. It had a nice clean push down, and then it accumulated, and then it pushed down again. And it actually pushed down a lot. It pushed down like, what is that? That's 500 pips. Let me measure this real quick. 90 pips. Okay. With that explanation out of the way, without me even saying anything, I guarantee you already know what I'm about to say. Yes, I'm looking to short this right off this minor level. My target is the low of this wick. At that point in time, if this candle does not absolutely destroy that low, and it doesn't, if this candle closes any other shape than this big old red block right here, if it looks any different, I'm closing probably all of the shorts, even the one up here, because that is going to be like days of accumulation and swap fees that make no sense to hold. Maybe you know what? Maybe I'll hold this one just to say I did it. But I'm closing everything else out at the bottom of this wick because, again, I think it's going to be choppy this week on this pair. Right? This is a secondary pair. Right? So like the pound USD is a primary pair. The Aussie USD is a primary pair. When you take pound and Aussie together, it's secondary pair. And again, just like I was saying, just the way that all works with correlation and stuff, this is probably going to get choppy for like a week. Within that choppiness, we'll take some clean A to B's. So we're going to take a short from here to here. That's A to B. And then it's possible we're going to take a long back up to these levels right here, which is why I have this line here. It's going to be probably up to this area right here. That's 200 pips. Yeah, that makes sense. So maybe towards the end of the week, we take a long, and the target is going to be up here. So, I mean, this zone, really just a visual aid, doesn't really mean much. It's just the low of this candle is where I'm getting at. That I'm just highlighting it because it looks good. That is going to be the short target, 120 pips. Again, I have an entry on right here. Every single entry besides the one from up here is going to be closed once price touches this low. I would genuinely be surprised if price breaks that low and just tanks down. It just doesn't make sense for it to do that right now. But if it does, that's why I just now decided I'm going to hold this position in case it does push down. I hope maybe some of you still hold this position from last week, but if not, then take this position. So let me draw that out. That's going to be looking like this. We're going to do probably, I mean, it has to be a 3-1. Where's the reward? Something like that. Pretty self-explanatory, this level right here. You know what, and it's possible that we actually break that low because on the example I just showed you guys on that daily time frame, it broke lower than this a little bit. So maybe our target is that low exactly. Because if we're expecting something similar to what happened before to happen now, it's going to break this low a little bit. And on that break at the low, we'll look at the small time frame, and again, possibly we're going to be buying this midweek. I'm not like glued to buying it, but if it's just smacking us in the face and it says buy me, then we're going to buy it. So that's it for the pound Aussie. Let's go to the yen. So I know we were kind of talking about the yen before we started this 4-hour time frame. So I feel like every time I analyze something, I always pull it back to history first. But it's for good reason. I hope you guys understand why and maybe learn a little bit. See these levels right here? You see how price came back to it? I'm just going to keep it as simple as that. We see these levels right here. We see how price is coming back to it. I don't think I have to say anything else. It's all done now. See you next time. No, I'm just kidding. So that's why this line is here. Specifically, it's the bottom of this wick right here. 1H. If I wanted to, I could just draw a fat zone, just covering the entire, this entire portion right here. In my opinion, that just looks ugly. So I was like having charts that look really good. Big old zone doesn't look really good. So I'm predicting price pulls to 162.3, and from that area is where I'm going to be looking to buy and hold long term. Probably swing partials, take partials. You guys know how we do that. Very similar to here, right? Price pull down. You know what? Almost exactly like this. You see how price dumped? And then look, we get a little push up, and then it dumped one more time. Let's just measure that. 150 pips. It dumped one more time, and then it kind of did a little bull or a flag pattern here. It shorted again just a little bit this time, and then it exploded. Right here at this point in time, if you didn't see the overall buy happening, you would have shorted right here with a target of one of these lows because of this pattern right here hitting the, I mean, all of that makes sense for a short, which is probably how it got all the volume to short down there. And then the buyers came in and said, nope, that's not what's going on. That's not the overall picture. The overall picture is up, and we know that it's the same thing going on right now. So that is what I'm looking to see here, is a possible short down to 162.3, which is these lows. And I'm not specifically going to switch to buys right on this line because it could come down a little bit more, right? We're going to let price do what it needs to do down here for a little bit of time, and then we're going to hop into buys. And just like last time, even if we don't buy in right here and we wait and we watch and we buy in right there, this is exactly where I bought in the last huge bull run. Literally, I bought right here. It was 158.65. That was my buy limit. 158.65 right here, right where my crosshair is. That is the buy entry I had, and I closed it way up on the top right corner. So we don't even have to buy right here. In fact, it doesn't even matter if we do, because if you buy in right here, you give it 22 hours, price is at the same spot. You could just do it again. You have the same opportunity again, just without the swap fee in between. Which is why I'm saying it's not like an immediate thing that has to happen when a price comes down here and buy. I want to see what it does. I want to see it reject. Maybe we place an initial buy and we hold it a day and we get in a second buy. Maybe we just wait for that next day, because this long right here, this was just okay. Right here, let me slow down. This was literally just a buy off of the bottom of the next daily wick, and just the support right here, or the liquidity. We can see how price chopped around here, and that's where it pushed up from. So this is where all the buy orders are coming in, is just right in this area. So it's simply just coming back to that, placing the buy. I put a buy limit here. Like I didn't even enter manual. I just put a buy limit right there, and I let the market work. Obviously, it went into drawdown because it pushed down and tagged me in right here, and then it kept pushing down. It pushed down another 25 pips, but my stop loss, I think it was 60 pips. So I think my stop loss was like way down here. So we're probably going to be doing something like that. I would be upset if that was the top. I'm going to be very upset if that was the top. Because I really think this, oh no, there's no way. There's no way. I really think this short opportunity right here is going to be mint. I mean, that's a clean 130 pips. If you want, you can consider the profit from this trade and use that as the risk on the buy. Or you could add that to your risk on the buy. If you were going to risk however much you're going to risk, dollar value, then just add in the profit from the short, and now you have what is essentially free lots to put on your trade, just whatever that ends up being, which is kind of the strategy I've been using with the layered trades. How, you know, sometimes like this, the main aspect here is a buy at 162.3. If we're expecting price to pull down here, it presents a short down there, so I'll take the profit from the trade leading up to the big one, and I'll just combine that, and that's my risk. It's obviously, if you're wrong, you just lost all of that, but I mean, I'm just giving ideas, right? Maybe you haven't thought of that, maybe that interests you. So there you go. So I guess that just leaves us one more, and that's the euro yen. And like I said, it's pretty much the same thing, so I'm not going to go all super deep into detail. You guys get the vibe that's going on here. Yep, that's it right there. I'm trying to find the bottom. What's the equivalent? Why am I having such a struggle finding the equivalent? I think it was right here, actually. This has to be it. Because this is the double bottom. Oh, wait. No, this is it for sure. So now let's go back. Yeah. Yep, that makes sense. So I just have these two lines because it's pretty much this entire area. It's really this right here. See these candles right here? That's really the target, but we're gonna keep it two lines. I just like the way that looks better. And yes, the short, same thing. It's nothing new here. Does anyone have questions on anything I just said? Look at that. One of these hours, gold and Bitcoin is just gonna freaking take off. I mean, we're only moving up like 80 pips, but still, I would love to see this. It's just interesting. Now I'm just thinking out loud. Analysis is done. It's just interesting to think if this is going to explode like today or on the next daily candle. What is it going to do after that while it's setting up for the rates? And what is it going to do after the rates? Like if price is at 23.6 thousand on the day of the rates, what is that going to look like? No matter what it looks like, we're going to short it that evening. Same with gold. Actually, you know what? Let's take a look at gold. I'm gonna